Like technical analysis in general, time analysis can still be done after multiple stock splits. Fixed time cycles and intervals are also single repeating time intervals. The length of the interval is not based on the square root of a price. Just like the fixed price-to-time conversion, fixed time cycles and intervals can be measured by a date range tool and be extended by using the cyclical lines tool. This 17-bar interval on a monthly chart covers periods of minor features within a larger continuation to new highs. Going to a weekly chart provides more detail. Going to a daily chart provides even greater detail on smaller features. But the intervals can get distorted when scaling down from a monthly chart. That is why it is suggested the interval be redrawn on the daily chart from the same points to more accurately fit the scaling on this shorter time frame. It may also be preferable to choose a shorter interval for smaller sections of the chart when moving to a shorter time frame. The broad coverage on the monthly chart does approximate important developments near the previous highs in the 40s. It does so without too much noise or clutter from the smaller details of minor swing points and breakouts on the shorter time frames. Similar to before, there is a general decrease in precision when switching to a daily chart that has the long intervals from the monthly chart. Redrawing the interval to fit the scaling on the daily chart or choosing a shorter interval from smaller swing points are the common solutions to regain precision.